Okay, thank you very much. Innovating through regulation. That's an interesting topic. Can I ask each of our speakers to just briefly introduce themselves? Stefan, starting with you.
Yeah, good morning, everyone. Stefan Dreyer, Managing Director of the Association of National Numbering Agency. So we are a global member association based in Brussels with 123 members focused on the promotion of the adoption and implementation of standards in the capital markets. Our work more recently has been focusing in the last few years on collaboration with partners to develop standard solutions for digital assets.
Hi, everyone. My name is Tara Lamort. I am with the U.S. Attorney's Office in the Southern District of New York. So I am a federal prosecutor, and currently I am chief of the Illicit Finance and Money Laundering Unit there. I'm also the Asset Forfeiture Coordinator. And so we prosecute all manner of financial crimes with the mission of protecting the integrity of the U.S. financial system. So it really runs the gamut with obviously a focus on money laundering. We also do sanctions prosecutions, Bank Secrecy Act prosecutions, and all sorts of financial frauds, obviously including crypto-based frauds.
Good morning, everybody. My name's Alex Wilson. I am a partner at Jones Day here in New York. My practice focuses on white-collar and regulatory enforcement defense. And I also give compliance guidance and advising on AML and sanctions issues in particular. A decent amount of my work is focused on the fintech and digital asset space. And in part, that is because until I joined Jones Day about 3 years ago, I was at the U.S. Attorney's Office where I had Tara's job and the good fortune to supervise her for a number of years. And so I am a reformed prosecutor as opposed to a current prosecutor, and we will see how much difference that makes in our perspectives as we get through the panel.
Mm-hmm.
Hi, morning, everyone. My name is Katrina Paglia. I'm the Chief Legal Officer and Chief Compliance Officer for Pantera Capital. Pantera is one of the oldest US-based blockchain-focused venture capital firms. We have been around since 2013, investing in traditional venture, Series A and seed rounds, early-stage token investments, as well as liquid digital assets.
Thank you. So I suppose we start with all these new regulatory changes that are happening in the United States, and there's a lot of excitement about that. The regulators are providing guidance and statements, trying to make the market move in the right direction, and as we know, there's legislation sort of hopefully coming into play. One for you, Tara. When you're looking at companies and you're making decisions about enforcement, what are sort of considerations that you might put in thinking, okay, this is an innovative technology, they're trying to do something new, and if it's not strictly, if it's in a gray area, should we be prosecuting or should we try and sort of talk to them and work this through? What are sort of things that you consider around this issue? Is it even a consideration?
Sure. So there's a number of factors that we look to with regards of who warrants investigation and then potentially prosecution. So, you know, for example, if I'm looking at an entity, I might want to know whether that entity has taken any steps to assess, you know, what illicit finance risks that they take based on their product, right? Has there even been an assessment done? And if there has, have there been reasonable steps that have been taken to try and mitigate the risk? And we are not looking for perfection here. This is not an exercise in perfection. It's an exercise in good faith and reasonableness. I will also take a look at the operations of the company, the product, and how it actually operates. And then I can look at what public statements the company is making, where it represents how it operates, right? And those public statements could be formal public disclosures, they could be pitch decks, they could be social media posts. It could take all sorts of forms, but how does what the company is actually doing match up with what they say they are doing, and is there a disconnect there? Because in the end, what we are looking for is evidence of willfulness, right? Did the company know the law and know what the law is, and yet take steps intentionally to evade their obligations under the law? And that's when something that becomes a potential problem that the company may have to remediate may turn to something that warrants further investigation and potentially criminal prosecution.
So it's that willfulness issue and considering all of that.
Absolutely, and for all of the statutes that we can charge criminally, with the exception of one, which we can talk about, they all require evidence of willfulness and intentionality, right? So that's what we're looking for. I mean, other things, you know, with a company that you could look for in terms of assessing whether they operate in good faith. Do they have compliance policies that are written? Okay, do they have a compliance program? How long ago were those policies written? Were they written 15 years ago and they haven't been looked at since? Is it a check it and forget it exercise? Or is someone actually looking, as this technology is evolving, to see how things, you know, sort of may need to be tweaked or fixed? So something like that. When something goes wrong, which something will go wrong, something always goes wrong, I mean, how does the company react to that? Is there, depending on sort of the size and scope of the issue, is there engagement with regulators or even potentially law enforcement? I mean, and now more than ever, based on everything I read, and I'm going to make my caveat of disclosure I shouldn't make. Based on everything I read, your regulators now are the most receptive that they have ever been to interacting with you, right? So did you take steps to try and do that? Did you take steps to try and remediate? When you did make a disclosure, whether it's to the public or a regulator or something else, your consumers, your users, was it transparent and truthful, or were there things that were sort of brushed under the rug? Those are all things that we would look at to assess good faith. My disclaimer I'm supposed to make whenever I speak, and I always forget to make it, is that I am obviously with the U.S. Attorney's Office, but my opinions are my own, and they are my personal opinions and not to be attributed to the office. But with all that said, based on my personal experience, those are factors that we would look at. You know, I've also seen, let's say there's internal reporting in a company, right, and someone reports up an issue. How is that person treated? Does the company have procedures in place for something like that? I have looked at well-established traditional institutions that really didn't have programs in place for that. And then people that are reporting wrongdoing are treated poorly, and that is not a sign of good faith. So it's definitely a multi-factor analysis. And to the extent that you are engaging either with a regulator or law enforcement for any particular issue, I just can't emphasize transparency enough, because there's sort of trust that is built there, and the more transparent you are, the more I will trust you when you say, but actually it's not that bad because of like blah, blah, blah. If we have a good relationship, I will trust that, versus if I feel you're hiding something from me. So those are all sort of like the factors that we would look at in making that assessment.
Thank you. So changing sort of direction a bit, Katrina, in terms of regulation, and you have a large portfolio of amazing companies there at Pantera, just wanted to get your big picture view on it. You know, what has been sort of hindrances? What could be done better? What has been good?
So great question, and I would say it has been a 180 starting on January 20th. The last several years, being at Pantera, and I was Coinbase prior to Pantera, the communications with the regulators were we'll just go with not great. But I think to Tara's point, we have seen a significant amount of outreach and positivity and constructive input requested from our regulators over the last several months. This administration has stated leading into the election and has consistently followed through with what their commitments were for the blockchain industry. We've seen stablecoin legislation nearly pass. It may have passed in the last 24 hours. I don't know where it landed after the debate started. Obviously, we have a crypto and AI czar in the White House now. We have an extremely crypto-friendly commissioner at the SEC. We've seen the SEC completely drop litigation that was going on for years. And we were talking about this before. I think we expected a lot of these litigations and Wells notices to kind of go away on some level, but for the litigations to just be completely dismissed was, not on my bingo card. So it's been not only consistent with what we expected, but I think super quick and even more thorough than we were hoping for. So what we're looking forward to and our portfolio companies are really excited about is market structure bill in the US so that we can really understand where these digital assets land on securities versus commodities. That's going to be a huge unlock. The portfolio companies that we're talking to are open to coming back to the US. We saw an exodus outside of the US. We saw people going to Asia, UAE, because they were significantly more crypto-friendly jurisdictions. And now that the US government has come in and really made these protocols feel comfortable that they could come here, they could launch a token, and maybe not get sued as a first step, has been a really positive change in the conversations that we're happening.
Very helpful. So, it's interesting because I remember when it all kicked off with the enforcement actions, there were a lot of engineering talent leaving, lots of companies saying, where are we going to go, going to these jurisdictions that don't have the capital market opportunities we have here at all. So I think there's real incoming bunch of inquiries that we're getting on that.
I think they are. The caveat to all of this is, in the absence of federal litigation, we've seen the states actually start to step in. So I don't know if it's as much of a headline, but the states are starting to kind of step in and bring suits against some of these companies. So it's not all, rose-colored glasses right now, but I definitely think on a net basis, it's more positive.
Stefan, so, you have some views on innovation and regulation and how there's that fine balance between the two. Do you want to share us your thoughts on that?
Yeah, sure. So when first presented with this panel topic, innovation through regulation, it seemed a bit of a contradiction to me. I think a lot of people going back in time will have this sense that there is a view that regulation stifles innovation. And I think, based on being here at this event, everything we've heard yesterday and what we'll hear more about today, and as the panelists here and panel panelists have said, if you read the news, you will get a sense that that innovation is not being stifled, and that actually regulators have taken up a much more positive, supportive approach to innovation. If you look across the globe, there are many jurisdictions, MAS in Singapore, ADGM, the FCA, the EU with MiCA, and as noted here, a notable change not so long ago here in the United States. I think that there is a much more, again, supportive stance for innovation, for having those conversations. I think the innovation comes through collaboration, through that dialogue. Obviously, there has to be, whether it's the financial innovation or the technological innovation, there has to be a use case, right? So it's not going to be the regulation necessarily, unless there's over-regulation, but really, is there demand for what is being developed? Is there, an application for whatever is being developed that's really going to be the driver for the innovation?
Thank you. Alex, so Tara mentioned some points around what she looks for. What do you say when clients are launching an innovative business? They're thinking about putting an infrastructure in place around it. What's your general advice around, how can we actually structure the business in a way where you don't have these issues, right? You have policies and you continue to maintain those policies. Yeah.
So the short and awkward answer that everyone loves from lawyers is it depends. It's going to depend on the product. It's going to depend on the service. It's going to depend on what it is you are trying to build. But the key point, which your question already sorts of embeds, is if you're talking to me or someone like me, you've already taken an important first step, which is to keep these types of regulatory and enforcement risks in mind. Everything is trending, it seems, in a pretty good direction. I totally agree with that. What everyone really needs to get comfortable answers that depend a little bit less is some degree of regulatory certainty. And hopefully that's going to come soon through legislation. There will be, at minimum, a process where the regulators are going to have, I think, much more digital asset-friendly guidance and hopefully actual regulatory processes that allow everyone to plan their products around what the guidelines are. But I largely agree with what Tara said, certainly from the prosecutorial perspective, which is you need to do the work to make sure you are analyzing what potential regulations you may have to comply with, and then create a process that's a good faith effort to comply with them. How much you're going to have to do will depend. If you are a traditional financial institution that is heavily regulated and is moving into the digital asset space, you have a whole host of regulatory obligations based on your existing structure that you are going to have to comply with and fit the digital asset picture into that structure. If you're not in a regulated space, you may have far fewer regulations to worry about, at least in a world where the SEC is now not trying to find a way to pull you into their regulated space.
There's also this tension, though. You know, a lot of innovative companies, and Katrina, you know this with these portfolio companies, they have limited resources. They're trying to get their product out and start to create revenue. And they want to do it in a compliant way. And sometimes the costs and delays associated with compliance can hinder them.
No, completely. It is not uncommon to talk to our portfolio companies about their product launches, what they want to do, then the risk of having a regulatory inquiry come in because they don't have, at the super early stages of their development, they just don't have the capital to be able to handle some of these subpoenas and just informal inquiries even can kind of cripple them. So, you know, we have a platform team that does our best to kind of negotiate good rates for them, and they can kind of go to firms, you know, like we were talking about with Jones Day, to kind of help give them the legal structure that they need. But it is a real concern, and it does stifle innovation. So I think the fact that we're getting into a more crypto-friendly regulatory environment here, and it's kind of ask questions first, maybe get aggressive later approach is been very well received.
I mean, one thing that I notice with startup companies, like it's one thing if a large institution gets a letter from you, Tara, right? They have legal counsel, they have resources, they have a team. But a small company that's trying to get a business out, that's got a small team, that's trying to innovate and break new ground, if they get a letter from someone like yourself, I mean, I get these clients calling me, and it does really cause an issue for them. I mean, their whole life is invested in these businesses. Is that even a factor on how you approach these companies in terms of inquiries that you may have?
I think it's a factor in how I would approach in obtaining compliance with whatever my subpoena or my request is. So as a prosecutor, if I'm subpoenaing or requesting something, I want the information. I have a good faith basis to ask for it, and I'm going to get it. But in terms of getting that information, I will work with the company to prioritize what is absolutely necessary, to stage things, to the extent that there's certain technological processing that we may be able to do on our end that they can't pay for on their end. We can try and work with that. And I'm not going to say, if you don't get me the materials in 21 days, I'm going to move in court to enforce the subpoena. I will work with you. So long as, again, there's that establishment of a relationship of trust, and I feel like you are acting in good faith with me, then yes, there are reasonable accommodations that can be made. Again, I am going to want the information, but it could be that I prioritize certain things, and I'm like, you know what, I actually no longer need request, 10 or something like that. Or you know what, like, let's refocus, and now I'm actually want to go in this direction. So there are reasonable accommodations that can be made there. Again, it really turns on good faith and a commitment to working with us to get us what we need.
Just to jump in on that, I mean, I think that's all entirely true of my experience of Tara's unit in the Southern District since I left it. It is not universally true. Like, that is the way prosecutors should behave. It is important to understand that that is not how all prosecutors do behave, let alone all regulators, which is an even more mixed bunch in many respects. And you will find people who are totally unreasonable, who don't understand the technology, who don't care about the problems of being a startup or a relatively small company.
So that's my point about innovation, right?
Yeah, and I think
just even mentioning subpoena to somebody, young that's trying to start a business.
They will change their product roadmap if what they want to do. A token launch is the best example because that's probably what gets the most scrutiny, at least from the SEC. You're literally changing your product roadmap or relocating where your business is because of a fear of getting a letter with a request that's just going to take out your entire cash reserves.
What I would say about the current environment is there is a useful moment here where, I think at least my sense is, everyone top to bottom at the federal level agreed that certain states are a different conversation, probably too long for a 30-minute panel. Everyone is trying to be supportive at this moment. That is pretty much the universal message, and they may not always know how to be supportive, but that's the goal. And so this is a moment to engage with regulators, with the administration. Different people will have different points of contact for that depending on which space you are in. But this is the moment to try and educate and explain how regulations can be crafted, how government enforcement efforts can be managed to not burden the industry in ways which will discourage innovation. And so if you have particular, issues that worry you, this is a time, it's a transition for everyone, because for the last 4 years you wanted to keep your head down and hope, Gensler never noticed that you existed. This is now a moment to put your hand up and say, here is how we need support from the government and the way you're going to structure the regulation so we can do the types of innovative business we want to do in a compliant way. And I think there are receptive audiences for that right now.
Next question, I suppose, is to each of you very quickly. We had acting CFTC Chair Caroline Pham with us at the VIP drinks on Monday night that Jones Day hosted. And she mentioned that the policy approach is the regulators are going to initially kick off by trying to be as helpful as possible by providing guidance and exemptions on what powers they have today to help the industry move forward. So question for each of you is, do you think that that approach by itself is enough, or do we need specific regulation to be put in place? Stefan, I'll start with you.
It's definitely a starting point. I mean, the conversation is an ongoing one, because we're not looking at a point in time where we're going to be finished and everything's done and dusted and boxed. It's not time boxed that way. I think, we will see further evolution. We will see further innovation. And so it has to be an ongoing kind of approach.
Katrina?
I think it's immediate relief through no action letters would be great, and I think that happens a lot more easily and quickly coming out of the SEC and the CFTC equivalent to that than you're going to see a market structure bill. Long term, we need legislation and we need regulatory clarity, because we can't continue to live in this ambiguous world where we don't know where a digital asset needs to be, where it needs to live. And to be clear, digital assets, I view as there's a spectrum to their life cycle, right? Like, maybe they are security in the beginning before they're fully decentralized, but there needs to be an off-ramp, which is what Fit 21 contemplates, and we need to be able to get them into that world where they're just so decentralized that they don't actually have a central group of people to file a 10K, for example. Like, there's an impracticality to, like, who's filing a 10K for Bitcoin? So I do think there's sensible regulation that's been proposed. I think the concern is that DC is DC, and legislation, there's always kind of give and take when you want to pass something that is this massive. I think Dodd-Frank is the legislation people keep comparing it to, and that took years. I don't think it's years from now, because I think we've been moving forward already, but I do think it's not, and my personal view is Fit 21 isn't like an overnight thing, but I do think it's in the next, within 12 months.
Tara?
Yeah, no, I mean, I agree. I think even from the prosecutorial perspective, of course, legislation and regulation will help, because what that means from my perspective is that we are operating from the same set of rules, right? I mean, I do think, of course, the community is welcoming guidance provided by regulators, and that is helpful. I do echo what everyone has said about this is the time for engagement, because my understanding of what was happening over the last however many years was there was just sort of a disconnect between sort of what regulators and people in government may have understood about this technology and how it operates and what the use cases are and what the market, all of those things, what you guys knew and what we knew. This is the opportunity to more even the playing field in terms of having a common base of knowledge. And then again, I agree, like having common rules and regulation that everyone understands, I think is sort of beneficial to both sides.
Alex?
I would love to generate some degree of disagreement and controversy just for the sake of the fun, but like that's
I
obviously...
was debating whether I was going to bring Alex to this panel.
Yeah, it's obviously that's correct. Look, no action letters and regulatory relief are much better than the alternative, but they're not a long-term solution. We want certainty. We want, frankly, statutory rather than even permanent regulatory certainty, so that everyone can structure their businesses and services and products around a well-established legal framework that can't change with future administrations. I mean, with that said, the other point in addition to engagement that I'll make is, in this environment of regulatory, non-enforcement, there's a virtue to getting out there and making facts on the ground. To Tara's point, a big problem that has always existed with the enforcement environment was a bunch of people who did not understand digital assets as having any real value except speculation at best and crime at worst. And if over the next 4 years, even without a permanent framework, you have a bunch of obviously useful services and products that are out there because they can be, because you're going to get non-enforcement, you're going to get no action letters, any future administration, even one that's less inherently crypto-friendly, will just not be looking at the same digital asset universe. So
That-
institutional adoption creates its own support within the government to maintain that crypto and digital asset friendly environment.
So that was Caroline's point, that even if the regulation is not there for whatever reason, because lawmakers can't make it work, if we have enough adoption, it's harder to reverse that if there's a change in administration. And
I think Caroline was being even more cynically political in that point than I am. I'm giving you the good version, which is the reasonable and logical people in government will see the good work you're doing. Caroline's point, also true, is if there are enough people invested in this industry, it will be much harder for anyone to try and destroy it.
I think, isn't the best position to have both the regulation and the adoption. Because even when you have regulation, if the regulators apply the regulation in a difficult way for an industry. And I'll give you a classic example, the crypto asset business registration legislation in the UK with the FCA. It started relatively easy for people to register and get registered. It became extremely difficult. So people wanted to do legitimate businesses and register. It just got stuck. They would make the application, go into a black hole, and just sit there. All right. So what are just some thoughts on application by regulators? Stefan, I'd love to get your views on that as well.
Application by regulators, I think, yes, it's not perfect. I think there's still a lot of education and awareness that needs to happen. I think everybody's finding their footing. But I think the appetite is there to understand that. And I think that, is where the sandboxes that are being created by the regulators in a lot of the jurisdictions present opportunities to go and tweak on the processes related to the application of the regulation.
Okay. Katrina, what do you think about that in terms of if there's a change in administration, even if you have the regulation adoption, if the regulator is going to be difficult, right, that stifles innovation still, right?
To some degree, I mean, I believe in regulation. I think that we need a standard. I think we need to comply with the rules. I think we need to put consumer protection at the forefront. And I don't think there's anybody I've spoken to in the blockchain space that is opposed to the concept of regulation. I think the ambiguity is the problem. You're always going to have bad actors in any industry, and you're always going to have aggressive enforcement officers. That's their job. So having some sort of sensible middle ground where the majority of us can operate is extremely welcome by the industry. So getting the clarity and the hopefully reasonable application of it for the most part is definitely something that we're optimistic is going to happen.
Tara and Alex?
Sure. I mean, I don't want to get too legal here, but I was just thinking, the thought that came to me when you talked about an application of a regulation and that may be easy at some point and then become more difficult is just Supreme Court jurisprudence on deference to regulators with respect to the implementation of statutes. And I would think that if there was an industry standard and a regulation and everyone had an understanding it was being applied in one way, and then there was a change because of change in administration, change in whatever, I think that might actually face trouble in the courts. Because it's supposed to be that the text of the statute, again, I'm not trying to be overly legal, but the text of the statute, the text of the right, those are supposed to be the governing guiding principles. And to the extent that there is ambiguity, it's supposed to be for the court to decide.
It's a good thing you made your disclaimer. So
Yeah,
I feel
personal
like
opinion, everyone.
That one, I hope we got that one on tape. That's going to be useful a couple of years from now. No, I think Albert, you're absolutely right that you can't eliminate all the potential regulatory obstacles just by having a good statute or even good regulations interpreting that statute. But from my perspective, that is unavoidable. That's just life in business. Regulators sometimes can be a problem. They can sometimes be unreasonable. They can sometimes not understand the industry. And the goal here really is to make the digital asset industry treated like everybody else with the same problems as everybody else, not the massively unreasonable burdens that have been placed on it to date. And so if everybody else who's got to deal with their regulator who maybe doesn't quite get that the way they're interpreting something is unhelpful or is unduly restricting innovation, that's a win and we can fight those battles and cross those bridges when we come to them. I think that would be a gigantic step forward from the industry to just have those types of ordinary regulatory problems,
Yes.
as opposed to the very unusual regulatory problems it's had to date.
Absolutely. Well, look, I think we're at time. I wanted to thank our excellent panel. most of the panels with us at the Jones Day US Regulatory Roundtable later this afternoon. I want to thank everyone. Thank you.